I think it's an anomaly. I'd call it a blip. I wouldn't assign any like real meaning to it. And it's not just that we got right back. It's that we made new highs right afterward. So there's just nothing there.
Right. The retail's waiting for their quarterly statement, which is coming out in June or July or whatever, right? And so
it actually would have come out the end of March then, right? So you'd have gotten it in April because you'd had your first quarter statement.
But that's old man retail. Young guys could tell you what the market did every 5 seconds of the day. That's a generational. That's a generation.
Where's my letter opener? Yes, that's that.
You guys don't get the mail? That's weird.
Fetch me my quill. I shall write back to this Charles Schwab.
Mildred,
fellow.
Where's my letter opener? And get me that gin gimlet.
Bring me my candelabra so that I may view my statement for the months of July, August, and September. How have we done, Jensen Huang?
RenMac goes Shakespeare.
RenMac Off-Script originated as a weekly internal research meeting designed to summarize and discuss what happened in Washington, the markets, and the economic data over the past week. It was always intended to be and remains a free-flowing conversation with no discernible objective other than to extract the wisdom and opinion of our analysts and their expertise. This is a conversation among colleagues. Individual circumstances are unique and nuanced. Do not mistake these conversations for investment advice because it's not. Here we go.
All right, welcome to RenMac Off-Script, where we openly discuss markets, economics, policy, history, and life. It is Friday, August 29th, 2025. I'm Steve Duttenhofer.
I'm Jeff DeGraff.
I'm Steve Pavlick.
And I'm Warren Buffett.
Warren, you've taken years off. You look great.
Yeah, I feel great. I'll tell you, ever since I stepped down, just so much more me time.
It's important. It's important that in your ripe old age, you get on that bus.
well, for those who are listening, that you know that's not Warren Buffett's voice. For those of you who are watching, you're sure that's not Warren Buffett. Josh, you look great. So this is Josh Brown, and a new voice on our podcast. I think this is episode like 330 of this weekly podcast, and I believe this is the first guest we've ever had on here. So Josh,
it is true. It's the first guest. Well, congratulations, Josh. Might be our last. The way you're doing
I'm honored to be here. Thank you, guys.
You're nice to do it. And so for those who don't know Josh, which I'm sure there are not many people who don't know Josh, he is the CEO of Ritholtz Wealth Management. He's a regular on CNBC's Halftime Report. He has a great podcast called Compound and Friends, has a blog called The Reform Broker, I believe.
Not anymore. It's I had a new blog called downtownjoshbrown.com. So we put the old blog out to pasture a couple of years ago.
A rebrand.
Downtown
now you've got
Josh Brown. I think the most interesting, look, you've got a great history and a great stuff going on, but I think the most interesting thing is you do this Future Proof Festival every year. It is, I guess, the industry's largest outdoor festival. It brings together wealth advisors and musicians and artists and fintech guys. Next one's coming up, September 7th, I think?
Yeah, it's like, honestly, it feels like it's tomorrow.
It almost is, Josh.
Yeah, we spent all year working on this because the size of it now, like it's transcended anything happening in the financial services industry pretty much at this point. And now it's like almost more akin to like a South by Southwest. Not only what's going on the festival grounds, but like the whole thing spills into the city of Huntington Beach. So the restaurants are all full. The hotels are all sold out months in advance. It really is like a massive thing. So this year we decided to cap it at 5,000 attendees. Last year we were at 4,200. Said, how much bigger can this thing get? I don't know, 20%-ish. But then like, let's preserve what makes it special. Let's not just let this thing run unchecked. So I think we'll have 5,000 people there this year. It'll be the biggest one we've ever done. Bush is coming to perform, Blues Traveler. It's just going to be epic. So thank you for mentioning it.
Absolutely. And for those who want to see the whole schedule, you can go to futureproofhq.com. It's all on there. He's got another event coming up in the Bahamas. You said South by Southwest for wealth advisors. Is this like the Burning Man for finance?
No. The one that I always get is Firefest. Is this going to be like Firefest? We don't get that anymore, but we got that in year one. People thought it was going to be just a fiasco because how do you explain an event that's never happened before to people in finance who are like stodgy, nervous, anxiety prone? We're like, you know what, dude? The whole thing's going to be on the beach and we have a half a mile of boardwalk and people are like, okay, but like what hotel? Like, though the hotels are for sleeping. All the content is outside. Like, what do you mean? What do you mean outside?
And for those who haven't seen the Netflix special for the Fire Festival, that was the fear. So good for you for making this so successful. It's great to see good people.
I appreciate it.
Absolutely. So lots to talk about. We can sort of go all over the place. Maybe we start with the Fed. You had President Trump this week say something to the akin of, we're almost at a majority now on the Fed. We got this Lisa Cook situation. We've got Congress coming back, I guess, next week, Steve? So we'll be talking about Miran's confirmation before the FOMC meeting. Steve, why don't you sort of lay the land for us, and then Josh can sort of chime in as you go and give his thoughts as well. What's going on?
Well, we touched on it last week, but I mean, Monday, President Trump fired Lisa Cook, and then yesterday, Thursday, she filed a lawsuit challenging his authority to do it. Now, I'm not a lawyer, but listening to people who are, it sounds like the issue is, can he remove her for cause? The Federal Reserve Act doesn't define what for cause is, and my suspicion is that ultimately it's going to be up to the Supreme Court to do that. These are over the allegations of the mortgage applications that she submitted, that the Trump administration under FHFA Director Bill Pulte is saying were not truthful, to put it politely, and she hasn't really denied that, as basis for doing this. So, we're sort of uncharted waters here. My guess is that markets aren't really concerned with it in the near term, just because, we have the September meeting coming up. It seems like one vote's not going to be decisive there. And I think because, again, you're anticipating a lengthy legal process here, at least in the near term, it may not be as much concern for folks, but I'll let Josh sort of speak maybe more towards that.
I would just say this is one of those things where it doesn't matter until it matters. And I know that's not terribly helpful for people who are trying to time markets or trying to get out ahead of whether or not there's going to be some kind of a reaction. But, I think so much of the way people are going to feel about this is going to be dictated by price. And so, that's really the only salient point to make. If this starts to truly affect the bond market, or if we start to see a VIX spike as these types of headlines come out, well, then, yeah, it's going to matter. It's going to be consequential. And if we don't, it won't. And I know people who are very political, and I'm not. I kind of think of myself as a centrist anarchist. I truly hate everyone, both sides equally. But then the second thing I think about this is like part of a pattern over the last 10 years where we have figured out that a lot of things that we thought were rules were really just norms. Like a lot of things, like the president has to disclose their tax returns. No, I don't. Oh, okay. I guess the president doesn't. Like, this is like part of a pattern now. And that's where we're going with the Federal Reserve. Like, there are norms. Like, the president doesn't do this. Well, now the president does do this. The thing I would say is, if you're cheering this on from the right, just remember what's good for the goose is good for the gander. And when we get a lunatic from the other side in charge, when this lunatic's time is done, if it ever ends, they're going to do the same. They're going to do the same thing. So you might end up with a Fed board 8 years from now that's starting to be stacked with people who want to put transaction taxes on Wall Street. People that want to have differentiated tax rates for people depending on what industry they work in. Like, you might get the complete 180 version of this, and if you love what's going on with this, you're going to hate that. So I guess be careful what you wish for. If you think this is a good thing, that the president knows better what should happen with interest rates and is willing to do whatever they want in terms of the board and the independence of the Fed in order to get it, okay. But The other guys are going to do the same thing soon enough. And we've got a million examples of that through history. So
and not
right
only
now,
will they complain about it, but they will, yell and say it's wrong. Right.
And right. And look, everyone is a hypocrite, because when they get into power, they will do whatever they accuse the other side of doing, and in some cases they'll even overdo it. And so right now the market is sanguine about it. We get questions from clients about it almost every week. The independence of the Fed, people do care, but like price has not shown that people actually care. The AI CapEx story is obviously trumping concerns over the independence of the Fed. That could flip at some point. It just hasn't yet.
Yeah. I think the important thing too, and we'll see, is, really since Greenspan, the Fed chair has always been, let's create a consensus, let's not have any dissent, right? Let's go forward and with one unified voice. And that's been going on for, I think it's been 30 years now. Like, it's been a long, long time. And every now and then you'd have kind of an outlier. And we've started to get more, right? I mean, Waller's been the first one to be really the vocal outlier. He's proved to be right. I mean, clearly Powell has gone towards his camp more than anything else. So that's what will be interesting. I mean, if we start getting, when you use the word, packing the Fed, right? Very similar to the Supreme Court. If we start getting these 5-4 decisions, and it's a tight call, and then that's where it gets really ugly. You should be able to sit there from a unified perspective and say, look, we have two mandates. One is inflation, and the other one is unemployment. And let's do what's right on interest rates to get those two things right. Let's not advocate for the environment. Let's not advocate for social justice. Let's not advocate for some of these other things. Let's just do what we need to do, which is our two mandates, and let's move on from there. I'll just pull the pin out of this grenade and toss it in, which I still think a lot of this goes back to Harry Reid and killing the filibuster back, whatever that was, 12 or 13 years ago, where, now you can have these kind of fanatical parts of the party. All you need is a slim majority, and you can start making all the rules instead of having, a more kind of, let's come to the middle. You give a little, I'll give a little. We come to something that's not exactly perfect, but nobody's really getting screwed in the long run. And that's just kind of the path that we're going down now.
Can we just say what the irony is here? There's some big individual ironies. Number one is the president was getting the types of jobs reports that were taking us in the direction of what he wanted on rates. And then he fired the person producing those reports. Okay. So make that make sense. The other irony is the economy is so great, they need to cut rates immediately. I guess like you have to just be all in the tank for this administration to like nod your head to that. Like if you're a public official, if you're working at the Fed, or if you're in Congress, like for you to be like, yeah, like you just gotta, like, say you're a Packers fan. This is my Green Bay Packers. I don't care what they do. I don't care if the team pulls the bus over, jumps out, and pulls off an armed robbery at a department store. I'm a Packers fan. Like, that's where you have to mentally be for that to make sense. And then the last thing, and to me, this is maybe the most consequential for investing, not politics. Look at this rally in gold. Look at the rally in the gold miners. Look at the rate at which emerging market central bankers are loading up on gold again. Like, everybody sees that the end result of this sort of thing, I hereby declare interest rates should go down 200 basis points. Everyone understands what the consequence of this will wind up being. It's not necessarily inflation. It's more like a chaotic environment where people reach for alternatives versus treasuries and dollars. And that's kind of uncharted territory. Treasuries and dollars have been the risk-off trade for a really long time. And maybe they don't have to be anymore. They probably won't be if the White House decides, Republican or Democrat, what interest rates are. They're doing it in Turkey. How does that experiment look to you? Does that look like it's working well?
Indeed.
So
all right, Steve, what's next?
Are there other things that we're looking at? We talk a lot about breadth. Is there any signs there? I mean, you talked about gold rally, you talk about treasuries, but equities are hitting all-time highs. It matters till it doesn't matter. Is there anything else that we should be focused on that we're seeing cracks? Credit's not cracking. Anything?
Well, yeah,
No,
that's what I think is really interesting,
I don't
right?
see cracks.
Yeah, you've got a Fed that's on the cusp of cutting rates, and I think mostly because look, Neil, if we can channel Neil for a minute, Neil will be back next week. He's still in London, I think, as long as his papers are in order. The bottom line is that the jobs market was already deteriorating, right? Neil's been on that for probably a good 6 months now. That there are the underlying strength of the job market is not there. So to the extent that that's part of the Fed's mandate, that's something that they should be leaning towards being, more accommodative around. The inflation picture is likely coming down, or at least getting into a zone that would support it without kind of pushing it into, below that 2% rate that they're looking at, right? Because obviously, if you let the employment picture get worse, you can drive inflation down faster. So you have to kind of keep your eye on the leading indicator of that, which is going to end up being employment. But I would sit back and say, look, your credit spreads are not at a point where you're seeing signs of stress in aggregate demand. The market's at a new high, and we're not just talking about Mag 7, which I know is everybody's favorite punching bag to just talk about the narrow breadth, but you've got a new breakout in equal weight small caps, right? The global market is basically in a new high uptrend and confirming, not everything, but certainly the vast majority of the trends are favorable. And you've got financials in almost every market, at least in some type of leadership position. If they're not the lead, they're a top 3, right? Those are not really the types of environments that you're like, man, we're about to hit a wall. This is a big problem. So, I understand Powell's position if you're going to listen to the market. Now, if you're listening to the data, you're going to be more in Neil's camp, and it's going to be something that's focused around the employment rate and what's happening in jobs. But looking at how the market is dissecting this, again, and this is not just being covered up by Meta and Tesla and the big names and everything else is going down. That's just not what's happening. So I think there is a much closer call here. Clearly, he's been convinced and swayed not only by the data, but probably by the internal politics of what's going on. And it looks like we're on a path for recovery. And, we'll see. The home builders certainly have responded well to it, but I would say the small caps are responding well to it as part of that. Now, the trends were in place, but they've been able to kind of get a surge around that.
My team informs me that year to date, both U.S. small cap value and international small cap value are ahead of the S&P 500. I would not have had that on my bingo card in January, probably not even in June. I think I think you make a good point. Like, that's not the type of environment where it feels like the economy is probably precarious. People are not buying those stocks. If everyone is concerned, the labor market thing's interesting. I think the mismatches there are crazy. We have a collapse in labor supply. And I think that is keeping the headline unemployment rate, which is what most normal people pay attention to, abnormally low. I think if you ask me where the cracks are in the labor market, I think you've got inflationary pressures in areas like hotels and travel and leisure. They rely on workers from overseas that are just not coming. And it's not like the college kids who 3 months ago graduated from Tulane and the Kelly School of Business in Indiana are going to go clean hotel rooms. So you've got this huge crop of unemployed recent grads. It's growing by the week, unfortunately. I think that is 100% a consequence of AI beginning to cannibalize entry-level hiring. And then you've got this inflationary pressure on other industries where there's really nobody to come in and take these jobs, and the robots aren't ready yet. So you've got like these really weird things happening in the labor market. And I don't think that they have to resolve to the downside. They could potentially, if we truly get an economic acceleration, maybe all of these recently graduated unemployed kids will get a shot somewhere. I don't know that it has to be catastrophic, but like if you ask me, where is the weakness or where are the potential cracks? I'm way more worried about that than I am about corporate debt. Like I'm way more worried about the mainstream, the Main Street economy and the hiring picture, not firing, but the hiring slowdown, almost grinding to a halt. Way more worried about that than I am about, financial issues. The corporates look great. They're doing great. And if anything, the lack of hiring of more employees is helping to boost their earnings and their stock prices.
I was talking to my son, who's an engineer, senior at a university, like known for engineering, and he was just talking about how some of his friends are graduating with CS degrees, and how 2 years ago it was the hottest thing in the world, and they're struggling right now. And my question is, well, if you're if you're a CS, have a CS degree, why can't you be an AI engineer? Like, why? What? I mean, how the damn thing works. I would think that that's not that hard to figure out how to prompt or whatever. And he's like, yeah, no, the marketplace is just unbelievable. It's it's shifting towards industrial and some of these not as specific, a little bit more generalist type of engineering degrees. I'm like, that is odd. But yeah, I mean, imagine, in our lifetimes, you got a finance degree, you were pretty much good for the next 35 years. I mean, okay, your HP 12-1C calculator might change a little bit, but that was going to be the biggest, innovation. Now these guys are like going in thinking that computer science is like the end all be all, and 4 years later they're like, yeah, no, we're not going to need you so much. I mean, that is frightening.
Go to Virginia. You will be hired immediately at a data center. You'll be hired immediately at an electrification company that is serving these data centers. Loudoun County is the data center capital of the planet. Something like 70% of all daily internet traffic runs through Loudoun County, Virginia. The reason why is because 30 years ago, that's where AOL got started. And now Amazon, Alphabet, they're building like millions and millions of square feet of data center. So if you're looking for like the bull market, and you're an engineer or working in computer science, like you might have to just go where the jobs are. They may not be in New York, they may not be in San Francisco, but there are bull markets, and there's plenty of work that needs to be done. Like follow the money. Look, when you think about this private credit boom, and now you have like Meta is putting up data centers that are going to be financed by Blackstone and Apollo or whatever. Like the amount of money being spent virtually guarantees that there are jobs. You just might have to think differently about what you thought you were going to do. So, I mean, then when has that not been that way?
And I know somebody in that hiring space for data centers and engineering down in that region, and it's just exploded. So
yeah, so put that
if you're
guy's
looking for a job,
cell
I
phone
got
number up
somebody
on
for you.
screen. Yeah,
What's that?
put his cell phone number on screen.
Reach out to RenMac.com. I'll get you that contact. We'll get you a good job.
So, Josh, what are your clients asking? Like, what's the big the big pressure point that they're concerned about?
Should we buy Tom Lee's ETH treasury? That's this week. we had we had Tom Lee on the show last week. We did like 400,000 views on YouTube. People just absolutely adore him. Like the algorithm loves him. The viewers love him. It's unbelievable. What are we hearing from clients? I get this general sense that people feel like it's been too good. Not to brag, like our returns look like what you think they'd look like. We're broadly diversified asset allocation. We're not a hedge fund. We're not doing magical shit. So like our clients, like the question is like, man, should we, like, is this too good? Like what's going to happen? People are now conditioned to expect this other shoe to drop. Just like given the last few years, COVID, 20% drop. This year we had a 20% drop. I think the worst we saw in 23 during the banking crisis was maybe like 12 or 13. And it's not that people want to sell ahead of it necessarily. I think they want to make sure that they have the dry powder to take advantage when the next shoe drops. And I think that's like healthy kind of. I'm glad that I don't have clients that are like asking us to race the semiconductor index, for example, or like load me up with more NVIDIA. Nobody's really saying that. So maybe that's like a good thing. overall that as good as the market has been this year, it's not like people are screaming for more risk. We're not here, and maybe that's still to come. But I remember prior bull markets like 2021, where people were like literally telling us stories about how much money their neighbors were making in SPACs and in Cathie Wood and whatever. We're not really hearing that as much right now, or almost at all. So I think that's healthy.
We did an episode on the SPACs back with a professor back in 21. I mean, we almost nailed it. It was like May of 2021, right? And this guy came on, he was an expert in the South Sea bubble, right? And there was actually an advertisement, I'm going to slaughter it, but it's pretty close. There was an advertisement in like the London Times at the time that said, a company of profound importance, taking investment dollars, no one knows exactly what they do, and they like oversubscribe the whole thing. I mean, that's that is the like 200-year-old version of a SPAC, right? Give us the money, we'll figure out what to do with it, but no, just trust us in the meantime, right? I mean, that was just Looney Tunes. It was amazing. As good as the SEC is, as good as FINRA is on most of these things and keeping the public from really hurting themselves, that was just a remarkable period where it really was the Wild West as far as
the South Sea company. It was so novel at the time. There were no other corporations, and it had like this government monopoly. But it was so convincing that Isaac Newton, after cashing out, having made a fortune, he sat out, I guess, in cash for like a few months, and his friends were getting even richer. This is one of the smartest people who ever lived, by the way. Literally. All right. Sir Isaac Newton. Okay. It's like,
allegedly.
We're not talking about Sir Paul McCartney. Okay. Sir Isaac Newton.
Buried in Westminster. I mean, he's in Westminster. That's how, yeah.
Yes. I think Boy George is too, though. So all right. Doesn't matter. So sat out, and then he came back in. It's like one of the great stories about like investing psychology, because the madness of watching his friends make even more money. He like knew it was a bubble, but he's still like, I can't not be in this. So it's hard. It's really difficult.
It's so seductive.
I don't think we're going to get an echo of the SPAC bubble. I think that's one of a kind. I think Chamath will get this thing off the ground, and maybe Bill Ackman will do another one, but I don't think we're going to repeat that. It's too soon. It's only 5 years ago.
So what do you think about China? I mean, I guess Pavlick, we got a parade coming up next week, a military parade. Putin's going to show up, a couple other people.
Yeah,
I want to hear from Pavlick on this, definitely.
Yeah.
So they're supposed to celebrate the 80th, anniversary of the end of World War II over in China. And I believe it's the third military parade that they've had under Xi Jinping. He's been in there for a long time. And I think when you think about what are the real intentions here, it's to dissuade U.S. naval operations there in the Pacific. And also there's this stated goal of having the People's Liberation Army have the ability to seize Taiwan if necessary. We'll see what if necessary means. By 2027. And I think that's when you see the hardware and the pageantry rolled out, that's sort of the message. Then to your point, who is attending the event? Vladimir Putin's going to be there. We've had some additional tariffs go on India. They're starting to move closer to China as well. And one of the byproducts of the Trump trade agenda has been a strengthening of this BRICS coalition. And I think when you look at who else may also be sending leaders over there, it's Indonesia and Malaysia. That's important. These are sort of the swing states in the Southeast Asian region, and they are still trying to sort of play both ends of the spectrum here with both the U.S. and China, despite the U.S. trying to pressure them to pick a side and announcing trade deals with the U.S. So I think that's something that people may not be appreciating necessarily here, but I think actually has some significance next week.
But then you've got the China market breaking out, right? Jeff?
It's breaking out. It's got momentum. It's in an uptrend. It looks good.
Jeff, yeah. Can you take a look at K-Web with me? So I don't believe in any such thing as triple tops. I just think they don't really exist in the market. You could probably argue with me and win. This is not science. This is my gut. What I see when I look at a technical chart of K-Web, just at a glance, two very obvious points of resistance, right about 140, 139. We're at 38. I don't think 40 is going to hold as resistance. I think we're about to burst right through. And it's like early. This is think about how long this market has been terrible. Like Chinese large cap tech. I think it topped in 21. The KWEB topped at $100. We're talking about breaking 40.
That would be the first time you break 40 since February of 22, right? So you're what, 3.5 years?
I think it's gonna go.
I do too.
It's been so long that I haven't even like really looked closely at the holdings, but basically this is 11% Tencent, 9% Alibaba, 7.71% PDD, Meituan's in the top 5, and JD.com. So it's still sort of the same stocks. Baidu is not as important as it used to be. NetEase is smaller in the index, but like
it's every stock that the Westerners can pronounce. That's
right.
It
that's
is.
That's how they rank it. They rank it by decipherability.
Right. The English. That's exactly right.
That's how they weight the portfolio.
I mean, marketing genius. Look, we've got a 5,900 was the old target, or sorry, the old high for the Shenzhen 300, CSI 300. We're at, I don't know, 48, something like that here. No, 42, I think. Either way, 32% return to get you back to that old high. I think we do it, by the end of next year. It's not going to be the end of this year, but I think we do it by the end of next year. I mean, they're trends, they're big bases, they're breaking out, they're showing momentum. The banks are helping to lead, but technology's obviously kicked in there. The CQQQ is the Chinese technology equivalent, which is, again, broke out last week and looks great. And, just starting on this journey, if you will, after being nowhere for the last 3 or 4 years. So, these are big turns, and they don't happen that often. They're more reliable when they happen to countries. They're more reliable when they happen to sectors. They're more reliable when they happen to industries, and they are individual names because obviously those are more idiosyncratic. But China's not going out of business as a country, right? Healthcare is not going out of business as a sector. Now names will, but it's easier to diversify, to buy and hold these things when they turn like this because you're getting the benefit of the whole thing just changing and shifting. So it's that zeitgeist that I think is really, really important. And to us, it's very, very bullish. And it's not just there. It's Japan, it's South Korea, it's Vietnam. They all look really, really good.
And Steve, Pavlick, we got India. We talked about them a little bit, but we've got new tariffs on those guys, right? But Modi hasn't come back and retaliated. So are we going to get some resolution on that?
I think that's the hope. The thing I'd watch for is the UN General Assembly meeting and whether or not Modi and Trump sort of have a discussion there on the sidelines. Again, you made the point. Right now, we've only seen 2 countries retaliate with respect to Trump's tariffs. It's been China, and we've seen Canada to a much lesser extent, which may explain the approaches that we've seen to both of those. So, yeah, I think the fact that they're not retaliating, at least in the near term, suggests that the door to potential deal remains open. So I'd watch that UN General Assembly in September.
You know what the dates are, just for those who don't want to travel to New York City?
I believe
100%. Stay out of New York City General Assembly week. It is a disaster. It took me 10 years to get that on my calendar, but I told my assistant, I'm like, the week before, the week after, and the week of, just don't even put me in the city. I'll go to Mexico City. It's better. Whatever. I don't care.
Wow.
No,
that's a comparison. All right, we're gonna get.
No, wait. Do we know the dates? Did you say the dates?
What
were the dates?
I believe it's the last week of September when you actually have the Leaders Summit. That's the important one. When you start bringing the world leaders in, that increases the security, and that's when, if you don't need to be in New York City, I'd recommend you not go there.
Do we have any loons speaking? Like, we had the Iranian guy speak a couple years ago. I guess that's like 10 years ago now. Like any like off the reservation people coming in to mix things up?
I don't know that the agenda's been necessarily set, so I guess it's TBD for right now.
Come back next week on the podcast where we'll let you know who the speakers are.
Yeah. Hey, Pav, they're coming back Congress comes back next week, right?
Yes, unfortunately. Yeah.
Okay, so where are we on the probability of a government shutdown?
I think it's probably come down. I was probably pretty high at about 60% right after Republicans passed the OB3 bill, because you had some divisions there amongst the fiscal conservatives there in the House. They don't seem to be making a big stink about this. And so I think right now, at least Republican lawmakers appear relatively united. You also had Chip Roy, one of the loudest, most vocal members, announce he's going to run for Texas Attorney General. So he doesn't have as much sway over the Freedom Caucus anymore. So I'm probably down now closer to 40%, maybe 35%, because Republicans at least appear unified there. That said, there are things to watch, and that is, are the White House going to send over this additional rescissions package? That's something that's going to be difficult for Democrats to swallow. If that happens right before September 30th, that could throw a wrench in this. And don't forget, Trump always remains the wild card here. Just because lawmakers agree to a deal doesn't mean Trump's going to accept it. There could be a variety of reasons he doesn't want to accept it, and part of that may just be, I'd rather have the story be a shutdown rather than something else. So that's always a risk, which is why I still have it a little more elevated than usual. The other thing to watch in September is, can the Senate pass some additional appropriations bill? So if we are actually looking at a shutdown at the end of September, it may only be a partial shutdown. So if you get some of those 12 appropriations bill, that would reduce the impact.
Got it. All right. You remind me of talking to Max Headroom from the 1980s. Remember that guy?
Let's move to the mailbag with Harry Chen. Harry, what do you have for us today?
Okay. Good morning, everybody. We have the question from Mark Angin Wider. And his question is, was April 2025 a cyclical bottom in your view, or was the tariff turn a correction within the cyclical events that began in October 2022? Thank you very much.
So Josh, that was our Michael Batnick right there, just for reference in terms of what you're doing on the compound, right? That's Harry Chen is our Michael. You want to take that? What do you think? Was that a correction? Was it? How do you view what happened in April?
I mean, like technically, it's a bull market. It's down 20%. But for me, like the duration matters, and that really didn't go on for long enough. It was also like extraordinarily man-made, and I don't mean man-made by like a lot of people. Like one person literally started it and stopped it. So I just think it's an anomaly. Would be my answer to that. I don't think it's anything. It's not cyclical because nothing changed in the economy. Like definitionally, nothing that takes place over the course of 10 days can be considered cyclical. So I just think the Rose Garden announcement with the poster board with all the nonsense on it led to some chaos. Then you had the algorithms kick in and everybody went risk off at the same time. We all understand the way some of these desks work at, Millennium and Citadel. So that's a component of markets that we've now all grown accustomed to. But then like shortly after, he's like, just kidding. And what's really fascinating is that the pros believed him at first and retail like just didn't care at all. And not just Robinhood Retail. Vanguard said the flows kept coming in positively. So the 401ks, nobody changed their allocations. Nobody stopped investing. Probably because it didn't go on long enough for anyone to notice. Like it's hard to panic if you don't even know what's happening. And most people couldn't tell you on a weekly basis what happened with their, with the market. So I think it's an anomaly. I'd call it a blip. I wouldn't assign any like real meaning to it. And it's not just that we got right back; it's that we made new highs right afterward. So there's just nothing there.
Right, retail's waiting for their quarterly statement, which is coming out in June or July or whatever, right? And so,
well, it actually would have come out the end of March then, right? So you'd have gotten it in April because you'd had your first quarter statement.
But that's old man retail. Young guys could tell you what the market did every 5 seconds of the day. That's a generational. That's a generation.
Where's my letter opener? Yes, that's that.
You guys don't get the mail? That's weird.
Fetch me my quill. I shall write back to this Charles Schwab.
Mildred,
fellow.
Where's my letter opener? And get me that gin gimlet.
Bring me my candelabra so that I may view my statements for the months of July, August, and September. How have we done, Jensen Huang?
RenMac goes Shakespeare. Well, I would put it just to Mark's point, and to reiterate what Josh said. 100%, it was man-made. It was policy-induced. It was policy uncertainty that helped drive it. I would put it not exactly in the same camp, but in the same column at least as long-term capital, which I was around. I was actually at Lehman Brothers at the time, LTCM. Maybe would have gone out of business the first time during 1998, but the Fed stepped in, right? They created the consortium, et cetera, and then were able to ring fence that pretty quickly. Take that back, further to something like maybe 9/11, which was an exogenous event. Maybe something like the Cuban Missile Crisis, which is probably better because that was an exogenous event and was solved by policy, right? So those, kind of help to reset the sentiment. And that's actually a big deal because when people remain nervous, they remain less committed, and that gives duration to these bull markets. So to Josh's point, the breadth and now seeing it in small cap, seeing it globally, I think is important. So, I think one of the things and one of the lessons here, and we get pushback on this, and I just don't care, is that, this was not about a zero-sum game. This was not about U.S. wins at the expense of these other countries. If you look, almost everyone else is making new highs, right? So this was a way to bring things together that actually might improve trade, not actually hinder trade. So, I think that goes unnoticed an awful lot, that this was not about U.S. wins at the expense of the Canadians, the Mexicans, the Europeans, whatever. This was actually something that all these equity markets are responding pretty well with, and maybe the exception being India, which is kind of stalled here recently, obviously with these tariffs. Still in an uptrend, but I think it does bear worth watching.
Mark, thank you very much for that question. We'll get a RenMac trucker hat out to you, or a fedora hat, in case you're still looking at the mail from the 1920s. I have a lot of those laying around. Wear them every day. All right, what are we watching this week, Steve?
Well, we mentioned Congress coming back and the shutdown. We mentioned the big parade in China. So I guess the one thing I'll add is Stephen Myron's confirmation to the Fed board. This is to replace Adriana Kugler, who stepped down. Her husband had been, I guess, participating in some trades that wasn't supposed to be, so it may have contributed to her stepping down a little early. And look, I think at this point, it's going to be whether or not Republicans in the Senate can actually get Myron in the seat before the September FOMC meeting. It looks like they're trying to make that happen. Again, will one vote make much of a difference? I'm not really sure. But, just going on what Josh and Jeff both said, I think, we talk a lot about the Fed and what it means for a monetary perspective and the concern about political influence, and that might increase the, compensation that investors will be looking at. But I sort of look at it more from the regulatory standpoint. And if you can have a majority of Trump appointed folks on the board of governors, that is going to be much more important for the direction of deregulation for the banks and financials. I know Jeff was, mentioning that they are in a position of leadership right now. And again, regardless of what one thinks politically, if you start to see more people with a deregulatory mindset put on the board, I just think that's probably a good tailwind for banks.
Yeah, I think that gets overlooked, right? It's that the Fed just doesn't set interest rate policy, right? They also are part of the regulatory arm of the banking system, and that's a big deal. So, I think that's part of the tailwind that you're seeing. The other thing that I think just gets that just needs to be addressed here is the Fed does seem to have a governance problem, right? I mean, they've had these governors that have crossed the line, however you want to define the line, but there are rules, and there are some of these governors that have crossed these lines, and you might say, well, they're inconsequential or whatever. Okay, but they're still rules. I mean, you have to either follow the rules or you don't follow the rules, and the Fed has kind of gone down this path of failure to supervise, if you will, which is a term that's in our business a lot, that I think just needs to be addressed. So clean it up, and maybe this stuff doesn't happen as much. Look, I'm continuing to lean into China. I think the small cap call is an important one. It's not a game changer in our view. I think it's more affirmation of the bull market. Probably the most interesting thing about small caps from our perspective is usually and historically, if you're long or you want to be bullish on, let's say, healthcare, you say, okay, well, healthcare looks good, and it's going to look good in large caps, it's going to look good in small caps. So you kind of tilt yourself towards small cap because you're going to have more bang for your buck, more beta down there. That has not been the case with this cap differentiation here. In fact, materials, I believe, last we checked, were leading the small caps in terms of the strength of trend, right? Materials are nowhere in the large cap in terms of leadership. So pharma, which we've talked about, small cap pharma looks fantastic. Large cap pharma does not, right? So it's a really bifurcated sectors and industries based on cap. And that's really, really unusual. I think there's a lot of opportunity there, but that's pretty unusual. So just a talking point. Probably the most important thing I saw last week in our work is the equal weight Russell 1000 discretionary trend, relative trend changed and turned positive. Now, this doesn't look like China. It doesn't have that kind of momentum to it, but it's been building. It's kind of been on the cusp, and it's at least moving in the right direction. And, taking this back to the conversation that Josh and I were having before, in terms of what is supporting this bull market, well, you've got staples making new relative strength lows on an equal weight basis, and now you've got discretionary making an equal weight relative high. That's not, sliding into recession, right? That's actually a good sign. So it was happening in broadline. It's been in hotels. It's been in cruises. Those look good. Probably one of the more vulnerable areas are restaurants, but even autos picking up, even home builders picking up. They're a tougher call for us, but I think there's a lot of action in the retail space, and frankly, a lot of good charts that are developing, and importantly, developing at the expense of staples, and that's a good underlying sign. So we'll continue to watch for that to broaden.
Josh, what's on your radar for the week ahead or two?
Black Rabbit is coming out on Netflix. Jason Bateman is back. Very excited for fans of Ozark. This is like, I think this could be the big show, like the big hit show of the fall. It's a ridiculous cast. Jude Law, a lot of really great character actors. So I'm pretty excited about that. Obviously, the FOMC. I think they're going to do 25 basis points. I don't think the market's going to really react one way or the other. We had the reaction already to this rate cut. We had it last Friday. Like, they basically telegraphed it. We had a huge day. The Dow actually made its first new high of the year. Maybe that's anticlimactic then when we finally get it. But I think those are the two biggest things on my radar for September.
That's great. Well, Josh, it's been a real pleasure having you. As a reminder, go
to you guys. Thank you for having me.
You bet. FutureProofHQ.com for all the information on this Future Proof Festival. It's going to be fantastic. RenMacAccess.com for our work if you want to see a free trial, if you're not already seeing it. Don't travel September 23rd and 29th to New York City if you want to avoid the UN General Assembly. We've got Texas, Ohio State kicking off football tomorrow, right? Let's go. Who the Terps got?
Miami Notre Dame might be the more exciting game, though.
Catholics versus convicts.
It's a big one.
Yeah, there we go.
Who the Terps?
If you can't get into Future Proof, I heard that there's a weakness in the fence in the southeast corner, so you might want to just try to bend under that.
You want to hear the real skinny? If you're going to Future Proof, instead of going on Sunday, go on Saturday and go see Oasis at the Rose Bowl.
Oh, whoa! Are you going?
My wife won't let me, but I'm told by other men who have stronger backbones that's the move. Pre-Future Proof. So,
you got to get there before they break up. So that might be right about that window.
How great is that night going to be? Can you imagine?
Oh, that's
go to
great.
Pasadena and catch Oasis. Oh my God, I can't believe I'm not allowed.
I heard some stat the other day. You got to probably fact check this, but at Wembley, the prior high of what a Guinness or whatever they were drinking was like 100,000 Guinness, and Oasis showed up the first night at Wembley, and they had like 270,000 Guinness.
I love it. Amazing.
A bunch of old guys who know how to drink. That's the point.
I got to say,
Josh.
drinking.
Folks, follow us on X, follow us on YouTube. Give us those comments. Love to hear them. And we'll be back next week when we'll be 1 week older, 1 week wiser. Neil will be here, we hope. And Josh, you're welcome back anytime for our show. Thanks so much.
Thank you. I'll see you all tomorrow.
I'm Steve Duttenhoff.
I'm Jeff DeGraff.
I'm Steve Pavlick.
And that's Josh Brown.
All right.
Thanks, guys.
See you, pal. Thanks, man.